Hi, everyone. Welcome to this week's segment of Mish's Market Minute. I am your host, Mish Schneider. And last time I was with you, I did my market outlook of 2021, and a lot of the picks that we talked about have just gone really to the upside. So that's really great. And of course, I showed you momentum in terms of the overall market, how momentum can diverge from price, as in the case of the S&P, but yet at the same time, you need to have a price confirmation. And clearly, what we've been seeing as we've gone into this week is that the market is still holding very strong. So I thought we would cover two different sectors today that I find particularly interesting. So I'm calling this segment Exploring New Frontiers. Well, first I'll give you a quick market overlook because I think it's always important as we're looking at the debate of can this market ever go down, or is this just a launch pad for new highs as we are in irrational exuberance. Then since we've already looked at food commodities, and I don't know if any of you've noticed lately, but corn, wheat, sugar, DBA, they have exploded. Sugar alone, as I'm talking to you, is up about 6% today. I'm so happy that I was able to give you and share that information long before anybody else has. But today we're going to look at ag tech. Because along with food, there's the technology that gets the food from the farm to your table, in essence. And then since Kathy Woods has become the superstar of the markets, and I say kudos to her, and awesome that it's a female who's now become considered to be one of the top traders in the world with the most money under management. I think she has something like 50 billion. She came out with a little information yesterday that she was exploring an ETF for outer space. And so I figured we've looked at space before. I figured we'd look at space and a few other stocks in that area as well. In fact, some of them we've also covered in terms of defense stocks, which also now are considered to be space stocks. So here's the list, as always, of everything we're going to cover. Beside the modern family, which is the Russells, the retail, the semiconductors, transportation, regional banks, biotech, I always like to cover junk because I really believe that this is the best barometer for us going forward to determine whether or not we're going to roll over or continue strong. And then these are the agricultural stocks. We'll go through those names as we go through them. It ends here with seed. And then these are the symbols for the stocks that we're going to look at in terms of space, the new frontier, which I've also done a segment on once before. Okay, so let's start here with the Russell 2000. And I'm not going to spend a lot of time on this. Really what we're looking for is any divergence that we see between momentum and price, not to scare you, just to give you a little bit of a heads up. As in, before you start buying up here ahead of an inauguration, a very hot situation we have throughout the country, which we hope and pray doesn't get out of control. Doesn't look like it will with our strong military, but you never know. It's always good to say to yourself, not should I be buying in light of that, but should I be buying in light of momentum? I mean, that really keeps it to charts and keeps your emotion out of it. So with IWM, you can see we're making new highs. That's our Russell 2000, our granddaddy of the modern family. That shows the continued optimism in the manufacturing and the industrial sectors of the economy going into 2021. Yet the momentum, I mean, it's up a little bit. It's up a little bit from the high that we had here, as you can see where my cursor is, but it's not exactly going flying as the market leadership is. So it's definitely well outperforming the SPY, as you can see, which is, I've said to you so many times. I have said to you, oops, I'm sorry. Let me go back to that. I've said to you many times is really where you want your eyes to be, is on the Russells, on the retail sector, which is XRT. Now take a look here. Momentum is gaining, but not nearly as fast as the acceleration in price. New all-time highs there. The consumer economy right here with that pent-up demand, or transportation, which is your demand side, which you can see, interestingly enough, last time I showed you this, I said that it was actually hanging onto the 50-day moving average in terms of the momentum. It still is, as we're going to new all-time high. So that's why I can't say it enough. It's good to watch the modern family, and right now everybody's happy, But if you want to see the switch from irrational exuberance to fear, just keep your eyes here on IYT, because what it's telling us is that it's going up, but it's hugging onto momentum. If we see any kind of price confirmation of that, I would be extremely careful. Now, moving on from there, of course, let's go to the banking, which with the yields going up that we have seen, this has really exploded. We had looked at regional banks on a weekly basis, I think is a clearer chart than the daily. Here it is. This had cleared the 200 week finally. We talked about that. And now is making almost as high as it was in 2018 before the crash. So this will be another good indicator, but right now the banking sector has taken off, and we covered the banks too, if you recall. We looked at all the banks, but look at the momentum here. That's doing well, and it's outperforming. So in terms of the banks, right now, doesn't look like it's over. We have some bank reporting on Friday, so that's something else to be keeping your eye on. And then finally, we have biotech. Biotech has been kind of crazy because of what's going to happen with the policy on the prescription drug plans, where prices actually went down, what's going to happen with that medical act, the Healthcare Act, and what's going to happen with vaccines and COVID. So right now, this too has exploded to new all-time highs. Momentum is in gear, and it's outperforming the SPY. So there you go. Still a very, very strong picture, just a little bit of caution when we look at the transportation. Junk is also very interesting. Well, underperforming the SPY, but that's okay. So why do I like to look at junk? Just to remind you, this is what pays the highest yield on companies that are at the most at risk. So if people are coming in, investors are coming in and buying junk bonds, they're basically saying risk on, we think the market's going to rocket higher. This is another one. We're looking at a weekly chart here. But I can tell you from my own moving averages, which I don't think we'll see on this because I haven't programmed it in, the 80-month moving average is right here at around 109. We get through 109. To me, again, this is a very good sign. If we start to break down, and let's switch over to our daily chart, and we start to break down underneath here, which is the 50-day moving average, that's good. Look at our momentum on this one. This is very important. This momentum, and let me see if I can move this up here. Okay, momentum is not doing so great. But again, it's not really, it's in divergence because the momentum here is under the 50-day moving average, whereas this one, the price is up. So this is another big key. If it cannot get through 109, starts to break down under that 50-day moving average, if momentum starts to decline, that could be another sign. And I'm just giving you ifs. I'm not giving you givens. They're not givens yet. In fact, I do want to go back to IYT for a second because we looked at it on a weekly chart. I wanted to look at the momentum on the daily, and the momentum on the daily is a little bit teeny stronger. So there you go. I think you have enough knowledge now behind you to be able to make good market timing decisions. Okay, let's go on to ag tech. Okay, so the first one is commercial vehicles. Believe it or not, they do machinery for ag tech. And look at this chart. It's already exploded, but I wanted to show it to you because I wanted you to see that this too, momentum made a high here with the price now is higher and the momentum is level off. Although the food prices keep continuing, those are commodities. And I think I've told you, commodities trade very differently than stocks because there's no earnings per share. There's no earnings, period. There's no being hindered by what do we do for the people who are our stockholders, or is the CEO leaving, or whatever that can affect a particular company. So this is not doing as well as, let's say, some of the food commodities, but it's still doing darn well. Would I do anything with this stock right now? Probably not. I just wanted to give it to you for information. I'm going to show you a couple that are more actionable. But first, I just wanted to show you the space. Here's John Deere. Same thing, doing great, but look at the momentum. The momentum is not as high as it was now as it was here with the price, which was lower than it is here. So once again, momentum may be starting to come down a little bit. Remember, we are going into earnings seasons. However, if we take a look at this one, Titan Machinery, we just really, with this one, We're just now starting to break out. Again, risk is always going to be the big thing, and the momentum still not as high. So I would keep my eye on this. Maybe we get through this high right here at 22.90. It's trading just under it as I'm speaking to you. Figure give it a little fudge, maybe 22.95 to 23. You'd want to make sure your momentum starts to improve. But this, if we take a look at this on a weekly basis, by the way, just so we can get some history, you can see that we are close, but not quite near those 2018 highs. So with food prices skyrocketing, this still has more upside. Again, check your earnings dates. RAVN, diversified industrials, again, ag tech. This is the weekly chart. So look at that. We had a death cross here and it went down. I've already been down. We had a recuperation pattern here. Those of you who have read my book, by the way, I don't know if I've mentioned my book is now on Audible, which if you want to listen to it, you can. And now here we broke out under the 200. But let's take a look at the daily chart. This also has broken out and the momentum has not quite as gotten as high as the price today. And it has an interesting kind of stick candle here. So really what I'm showing you is that if we get any kind of correction in these stocks, this might be a good place to go because I don't think the food commodities are done yet. I think they're just getting going, quite honestly. I know that's a very bold statement to make. And next week, we can talk about more specifically the food commodities. This is another one. This is commercial vehicles as well. This one's a little bit saner, although look at these big spikes. It's only a $2, $3 stock, but it gets these huge spikes and then comes down. So trade this one carefully. But it looks like now it may actually be getting some level of consolidation. Your risk obviously is 250. The momentum hasn't really wowed us yet, but keep an eye on this, particularly if it can get through 350. Then maybe you'd have about $1 risk. And if we just take a look at a history on this one, because it's always good to look back, this stock at one point, if we go back in time, was trading up to 750. So that's would be a double. Even before that, if we go back to 2010, it was trading up at 15. So these stocks have all well underperformed through the years, and now we're starting to pick up because of the rising prices in these food commodities. Going back to the daily chart here. The next one is, and the last one in this space is seed. I like this one the best. Well, again, we're pretty far from the risk. Are we looking? Yeah, this is a daily chart. But again, if we go back in time and just have a look, let's go on a weekly chart. Makes it so much easier. We go back in time. You're going back on this chart. You're looking at a stock that at one point traded up in 2009 up to $179. If we go back on a weekly chart to where we are right now, we're trading at $17. That's kind of interesting, right? So at this point, let's go to a daily chart. The momentum is not as strong as the price, so I'd probably wait for some kind of consolidation, maybe on a dip near around 15, or if it gets a breakout over these levels here, which would really be over 1850, I would only risk to about 15, just to see what's going on there and hoping that momentum catches up. Okay, so now let's change gears and go into some of these other picks that we have that deal with outer space. So right now, let's start with space. We've certainly covered this one before. What's interesting about space is just yesterday, it finally proved that it could hold the 50-day moving average. It touched down on it. And then yesterday, it had a nice move above it. Yesterday was the perfect setup. When I say yesterday, I mean Wednesday, the 13th, was the perfect setup date, or actually Tuesday, the 12th, was the perfect setup date. And then it got some follow through. Obviously, there was some inside information, I would bet. Then the news came out about Cathie Woods in the ETF, and there you go. It exploded up. But it's not through these highs yet. And again, let's take a look at a weekly chart on this. This, of course, is a newer issue. If this thing takes out 35, especially on a weekly close, then it's possible we can go much higher, maybe even up to about 50 to 55. So there's still money there. It's just not the clean risk against moving averages like we always like. So you have to find other parameters. Look at our momentum starting to catch up. And today was the big day that it started to outperform the SPY. Space, it happens to be Virgin Galactic, which is in New Mexico. I know they also were supposed to start flying in January. I have not heard whether or not that's going to happen, but that would be an interesting thing to watch for. That could give it a real good boost too. Next, we have ARK Genomic Revolution. This is an actual ETF. So it's interesting that this could wind up being some kind of competition. But again, look at the movement. This thing has just gone straight up. I've told you the story about the space barons with Musk, Bezos, and Branson. And so what I think could put the kibosh on this whole area would be what happens with the Biden administration. The Trump administration was very amenable to space exploration. In fact, Trump was creating the Space Force, which is interesting. We don't know what the Biden administration is going to do, whether they're going to support it or not. As you know, SpaceX, part of Elon Musk's conglomerate, has hooked up with NASA and has been well funded. But this is definitely something else to be looking at as we, again, get through the next couple of weeks. With the price high, momentum hasn't necessarily matched up. 100 really here looks to me like the nearest level of support to get through, and maybe a weekly close over this 110. The next one also has gone up, not quite taken out momentum. Looks really hard to see in terms of a risk. In fact, let's take a look on a weekly chart because I don't really know the history of these things. These are all instruments I'm seeing for the first time because of Kathy Woods. So there you go. And so right now, this is actually a relatively new instrument. This is another ETF, ARK Innovation, and it's making all-time highs here. So the question is, what do we do when we have all-time highs? Well, the simple answer is this. You start to look for other parameters to measure for your support and your risk. It could be the momentum indicator. It could be a 10-day moving average, which we don't have on this chart. It could be just good old-fashioned charting. Former resistance now becomes support. Or it could be a calendar range, something that we follow very closely as we're going into a 6-month calendar range in Market Gauge. But that will be something that I would cover with you potentially next week, because that sets a calendar range for the next 6 months. So none of these you should be looking at and going, darn, I wish I knew about these before, because if these are the trends for 2021, we will have more opportunities. Boeing. Now, Boeing is interesting because Boeing, of course, has had buco problems with its MAX plane. However, there has been some clearance on that, but then there was an airline that disappeared. I don't know what happened with that out of Jakarta, I believe, last week. That wasn't a MAX, but it was a Boeing. Then, of course, they just paid this $2.5 billion fine. So we want all the dust to be gone with Boeing, all the negative press to be gone with Boeing. But I would always be super careful when trading Boeing because, of course, you want to know your risk. And that's what makes this so interesting right now. You're sitting right on the 50-day moving average. It's the first day we're getting back over it. We were under, we were over, we broke it, we got over, we went under, we're back over. So I would say, now if it can clear over 214, I would probably either use a risk to under this low of 201, or if you really wanted to play it tight, I would get out if it breaks down under that 50-day moving average, which right now is at 209.09. Certainly not outperforming the SPY, as we know, but look at the momentum. The momentum is no divergence. It's hugging along with the 50-day moving average, which means through that 214 could be an interesting opportunity, particularly as it is one of the stocks that came up when I researched space exploration. Next one I know we covered as part of my market outlook, and that is Lockheed Martin. This is a defense stock, but I guess they're jumping in on the bandwagon of space exploration. This had a classic reversal bottom, which means it made a new 60-plus day low, and then the next day on good volume closed above the high of the day before. But it's going into resistance now. So I think this is another good one to watch. Check out the momentum here. Is no divergence. It's under the 50. It's under the 200. The price is under the 50, under the 200. I would keep an eye to see what happens to this. If it can get a confirmation of a phase change over the 50, then you can use whatever the price low is of the day. It clears the 50 as your risk. And maybe you'll start to see the momentum catch up. And maybe it's time Lockheed Martin, which has been under pressure, would be a good instrument to trade. Certainly it's underpriced, especially as you compare it to space and even Boeing. Another one like that is Northrup Grumman. Northrop Grumman. This is just clearing the 50 and the 200 here. This might be the best one at all. In fact, we have a divergence here in that the momentum has cleared the 50 and the 200, and yet the price is just cleared the 50, but not the 200. Momentum is increasing on this one. This is the first day it's trading over the 50. You get a second day confirmation. Then I think that I would actually even put our own members into this stock. So that's a really good one. And by the time you hear this video, you will know whether or not you have that second day confirmation. So that's really good. And then the last one I want to give you, I just love what it's called, UFO. I live in the state of UFO and Roswell. This had a gap higher. This is called a breakaway gap. Great in the momentum and great here. So let's take a look at this one on the weekly. This is a relatively new issue from 2019. We haven't quite gotten to the highs yet. 25 really looks like, or 24.50 looks like a good risk point. Let's call it 24.40. When you get a gap like this, you can buy it and you can risk to under the low of the gap, or you can give it a little room like I just mentioned to about 24.40. I would probably say at this point, when you have a breakaway gap, this is a clean breakaway gap. You take a look at it, it's on new highs. You can simply put your stop in, let's say somewhere around 26.75, really risk tight. Today's low, by the way, or the day I'm talking to you, is 26.87. So I like that 26.785 level right underneath the low, and see where this goes. Look at that momentum and look at that. So you can see that sometimes when you find out about new sector, like we're finding out here, and you get a billionaire running 50 billion interested in it, it's good to take a look at the charts and then apply your own rule system. So I hope that was useful to you. Thank you so much for watching. Thank you, StockCharts, as always. You all have a great day. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.